It had some issues in the 1890s when there was a problem emanating from the property collapse of that period, and as a consequence of that, its own banker, the Queensland National Bank, more or less or almost collapsed, and circumstances required that the Bank of Queensland, not then called Bank of Queensland of course, to suspend trading for a period. But it survived, and it survived through the First World War, and indeed through the Depression of the 1930s. It didn't grow a lot, but it survived because it was very conservatively run, and, as I said earlier, met the needs of its customer base. And if you look at what's happened in the development of the human race across the whole eon of the universe's life, it's all happened in the last 2 seconds. It's a bit like that with the Bank of Queensland. It starts in 1873 or whatever it was, and not much happens until about the mid-1980s. Thereafter, it accelerates, and it's now at a point where it's a public company, becoming a public company in 1970. It's a public company, and it's got a capitalisation of $3 billion, something that was completely unheard of 20 years, 30 years ago.
I would think that if you add the head office and the franchisees together, you've probably got about 2,500 people involved. But I just want to reflect, when I joined the board in 1996, I'm pretty sure that the profit for that year was something in the order of about $11 or $12 million, and we had a capitalisation of around about $100 million. We now have a profit of $250 million for around, say, with a capitalisation of $3.5 billion. Going back through some of the older records of the bank, it would seem to me that it was extremely well run and adopted a very conservative basis upon which it lent money, and bearing in mind it was born out of a building society background where the assets upon which it was lending was primarily houses and not as a merchant bank as such. It's very easy, or easier, to ride out a housing market slump than it is a business slump. The most significant period during my chairmanship was the global financial crisis, and I took over as chair almost to the week that Lehman Brothers collapsed and the securitisation markets shut around the world. And unfortunately, again being reasonably conservative, we were in a position where we were using securitised packages to borrow funding, but right at that stage we were in a very good spot, so that did not cause us any problems. But it certainly meant that we had to review our whole strategy. It was a very significant period of time, and coupled with the fact that we then went into a period of some national disasters which caused us some disruption. and obviously the floods of 2011, Cyclone Yassi during that period of time as well, where we had many thousands of our customers severely affected. Also how we had to ensure that we had a very good disaster recovery management program in place to overcome that. Fortunately, all that worked out well.
It was important, I thought, that we move our sights beyond Queensland to see if we could trap some of the opportunities which existed in other states. It was accompanied by the development of a full franchise model in our OMBs, our owner-managed branches. As we sit here today in 2014, the franchise model is alive and well and has contributed massively to the growth of the Bank of Queensland over the last 10 years.
As the major four banks were withdrawing their branches out of some of the suburbs and towns, two banks in particular saw an opportunity to take up that void. One was Bendigo and Adelaide Bank through their community banking model. The other one was Bank of Queensland through the franchise model. It's worked well because the person who stands behind the counter who's serving the customer knows the customer.
Let's look at the Bank of Queensland's board today. The Bank of Queensland's board today only has one Queenslander serving on it.
Now, we're part of Australia. These companies deal with shareholders and deal with business around Australia. You can't just have a bank like ours now with only Queensland directors.
Queensland has operated within the shadow of the southern states for a number of decades of the last century. And indeed, the emergence of a flurry of takeover activity towards the end of the last century was a matter of deep concern to many people within the business community. Many very good Queensland companies disappeared as a consequence of all of that. Yes, Queensland has had to change its attitude to the doing of business, and it has lost a lot of its quintessential companies. And in a sense, I suppose you could say, the Bank of Queensland's experience moving from the end of the last century into this century is a reflection of that same activity, in the sense that the Bank of Queensland was, as Queensland was, essentially a Queensland company operating in Queensland by Queenslanders. Queensland is the location of 60% of the bank's business today. Of course, the consequence of that is that 40% of the bank's business is in other places. And that is a fairly significant balancing act, I think. And I dare say, as we move forward and develop our business in other markets, that balance will move closer to 50-50.
As the bank becomes more of an electronic bank, it won't matter where the customers really are, and it will grow accordingly. And one of the things the bank has done in the last 12 months is acquired Virgin Credit as a means of actually being able to garner a lot more electronic banking business from right across the country.